These are 8 top stocks in pre-market with big percentage move today. Our review on RSLS. ReShape Lifesciences Inc. is a company focused on helping people manage obesity and metabolic health through less invasive methods. They've built a pretty interesting portfolio around that idea, from the well-known lap band system to the Obalon balloon, which is a swallowable, gas-filled balloon designed to help with weight loss without surgery. They're also working on some forward-looking tech like their diabetes block-stim system, which uses vagus nerve stimulation to potentially manage type 2 diabetes. So overall, their whole vibe is about treating obesity and related conditions with smarter, safer alternatives that don't involve major surgery. Now, here's what's got the stock flying this morning. ReShape announced a new partnership with an Israeli company called Motion Informatics, and the market clearly liked it. We're talking up 90% in pre-market trading, which is a huge move. The deal gives ReShape exclusive rights to import and distribute Motion Informatics neurorehabilitation tech in the US, with the main product being this next-gen device called the Stimul 03. It was recently showcased at a big occupational therapy conference, and apparently it caught some serious attention. This is a bit of a pivot for ReShape. It's not directly in the weight loss space, but it's adjacent in a way that makes sense. They're expanding into AI-driven neuromuscular rehab tech, which still fits into their broader health and wellness mission. The Stimul 03 seems to use a mix of neuromodulation and smart tech to support physical rehab, which could eventually open up new revenue streams in a completely different vertical than they've traditionally operated in. But let's zoom out a bit. While this partnership sounds exciting and futuristic, it's still early. No revenues hitting the books from this just yet. It's a strategic move that could position ReShape well if this tech gets traction in the US, but it's not a silver bullet that transforms the company overnight. The stock's big jump feels like a classic low-float, small-cap reaction to good news, lots of momentum, but also a bit of a speculative edge. So if you're an investor, it's one of those moments where you want to recognize the potential here. ReShape is showing that it's willing to innovate and diversify, but also stay grounded in the reality that the story is still unfolding. There's promise, but we need to see execution. Our review on STSS. Sharps Technology Incorporated is a small but focused player in the medical device space, primarily known for its smart safety syringe products. These aren't your typical syringes. Sharps builds in both active and passive safety features to help prevent accidental needle stick injuries, reduce medicine waste, and make sure the syringes can't be reused, which is a big deal for healthcare safety. They've got products like Securguard and Soliguard already out there, and they're also playing in the pre-filled syringe market with some specialized copolymer tech. Manufacturing is mostly based in Hungary for now, but they've been making noise about expanding into the US too. Now let's talk about this morning's wild ride. Sharps is up a massive 87% in pre-market trading, and what's especially crazy is how it got there. The stock saw a 60% breakout basically right as pre-market opened, and then it tacked on another 50% a little later in the session. We're talking about big moves in a very short window for a company that, before all this, had a market cap of just under $500,000. So it's a super low float situation, which means any spark can turn into a fire pretty fast. That said, there wasn't a flashy press release or headline that kicked this off, at least not something public yet. So this feels like one of those moments where speculative traders started piling in, either because they're betting on future news, or something's circulating behind the scenes. It could be connected to their US manufacturing expansion plans, or maybe whispers about new deals or funding. With a market cap this tiny, even a relatively small development could justify a big percentage move. But again, right now it's all momentum and speculation driving this. If you're an investor watching this, here's the takeaway. This is the kind of move that puts a microcap stock like Sharps on the radar. The tech they're building addresses real issues in healthcare, and if they can scale or land a meaningful contract, things could get interesting. But until we see concrete news, just know this is very much a high-risk, high-volatility situation playing out in real time. Our review on KTTA. Pasithea Therapeutics Corporation is a biotech company zeroed in on central nervous system disorders and certain cancers, with their lead candidate, PAS-004, being a MEK inhibitor aimed at conditions like NF1 and tumors tied to RAS or RAF mutations. Today, the stock is having a big moment, up 71% pre-market after a solid 35% breakout that kicked off right after the press release dropped. The catalyst? Their Phase 1 trial for PAS-004 just got the green light to escalate to the next dose level, 30 mg, from the External Safety Review Committee. No dose-limiting toxicities were reported in the last group of patients, and importantly, no signs of rash, a side effect that often derails treatment for competitors in the MEK inhibitor space. That clean safety profile is what's got people buzzing. Investors are responding to what looks like a safer alternative in a competitive space, and the fact that enrollment for the next group is already lined up adds to the sense of progress. That said, this is still early stage. We're not seeing efficacy data yet, and there's always a level of caution with small-cap biotechs, especially on pre-market spikes like this. A lot of momentum right now is being driven by potential, not results, but for a name like Pasithea, just moving smoothly through Phase 1 with no red flags is enough to turn heads. Our review on PRFX. PainReform Ltd is an Israel-based pharma company focused on reformulating pain treatments to boost effectiveness, reduce side effects, and speed up recovery. Their lead drug, PRF-110, recently hit a bump in Phase 3 trials, but this week, they threw a curveball. The company announced a surprise move into clean energy with the acquisition of Deep Solar, an AI-driven solar analytics platform. That pivot sparked major interest. Shares spiked 54% in pre-market with a 70% breakout right after the news hit. It's a bold diversification play, tapping into the booming smart energy space. The idea is that Deep Solar's optimization software can bring in new revenue streams and boost shareholder value. It also gives the company a new narrative after a tough year financially, including a $14.6 million net loss and ongoing R&D expenses. But sentiment's cautious. The stock gave back gains just as fast heading into the open. Investors are intrigued, no doubt, but with that kind of volatility, the market's clearly still trying to figure out whether this is a smart evolution or just a high-risk pivot from a company still working through core pipeline challenges. Our review on WHLR. Wheeler Real Estate Investment Trust Incorporated is a fully integrated, self-managed commercial REIT that focuses on income-producing retail properties, mostly grocery-anchored shopping centers. Their portfolio is pretty widespread across the Mid-Atlantic, Southeast, and Northeast, with a total of 75 properties, including a solid presence in South Carolina, Georgia, Virginia, and Pennsylvania. Think places where people go for everyday essentials. So it's all about consistent foot traffic and stability. This morning, Wheeler's stock had quite a moment. It popped about 35% pre-market and even saw an 85% breakout spike right at the pre-market open. That kind of move tends to grab attention, especially for a REIT that's usually seen as more of a steady, income-generating play rather than a big mover. But here's the thing, while it looked like it might trend higher, momentum cooled off as we got closer to the market open. Shares started reversing, and you could feel the tone shift to a more cautious one. There wasn't a major headline driving the spike, so it's possible this was just a short squeeze or speculative momentum kicking in. In any case, this kind of volatility isn't super common for a REIT like Wheeler, which suggests the market's feeling out the story right now. Bottom line, investors are watching this one closely. The fundamentals haven't changed overnight, but when a sleepy REIT makes a sharp move like that, it's either a setup for something bigger or a flash-in-the-pan trade. We'll see which way it goes. Our review on ELAB. PMGC Holdings Inc. is a diversified holding company with a portfolio that includes its biopharmaceutical subsidiary, Northstrive Biosciences. Recently, the company made waves with a significant development agreement. Northstrive partnered with Yuva Biosciences to develop treatments for obesity, type 2 diabetes, and other cardiometabolic conditions using Yuva's proprietary AI platform, Metonova. The focus will be on enhancing mitochondrial health, which plays a central role in a wide range of age-related diseases and conditions like obesity. The news sparked a notable market reaction, with PMGC's stock jumping 31% in pre-market trading, including a 40% spike early on. However, the price showed significant volatility as the market opened, with the stock experiencing choppy price swings, reflecting cautious sentiment. While the partnership represents a strong move for PMGC, especially with the cutting-edge AI-driven drug development approach, investors are still somewhat hesitant, keeping a close eye on how this collaboration unfolds. There's optimism, but also some uncertainty as the market waits for more concrete results from this ambitious venture. Our review on SUNE. SUNation Energy Incorporated is making moves to solidify its financial foundation. The company, which provides sustainable solar energy and backup power solutions, just completed a $5 million direct offering, rounding out a $20 million fundraising effort. The proceeds from this offering were used to pay down $9.4 million in loans, significantly improving its balance sheet and giving the company more flexibility to pursue growth opportunities down the line. This is a big step for SUNation as it looks to strengthen its position in the renewable energy sector, particularly in solar and battery storage. The stock saw a solid 28% jump in pre-market trading, with a 30% breakout, signaling investor optimism. However, that excitement didn't last long, and as the market opened, the stock started to cool off. Investors are cautious, especially given that similar offerings in the past have led to dilution, with shares dropping sharply over 90% in subsequent trading. The market cap is still relatively small at around $482,000, and with such a significant dip following the offering last time, there's reason to proceed with some caution here. SUNation's plans are promising, but the volatility tied to these financings means that investors should stay alert and assess their risk tolerance carefully. Our review on iCCT. iCoreConnect Inc. is continuing to make strides in the cloud-based software and tech space, with a strong focus on improving workflow productivity and profitability for healthcare practices. Their platform offers over 16 SaaS solutions designed to solve a variety of business problems in healthcare, from e-prescribing and HIPAA compliance to medical IT and claims management. With a network of over 100 agreements with state and regional healthcare associations, they're carving out a solid niche in the healthcare sector. In pre-market trading, the stock shot up by 21%, signaling a steady upward trend. However, it's been a bit of a roller coaster, with some big price swings toward market open. While the positive movement suggests confidence in the company's growth potential, these fluctuations point to the kind of volatility that's typical with stocks in this space. Investors should keep an eye on how the stock behaves once the market opens, especially if these sharp swings continue. Despite that, the growth and demand for their SaaS solutions in healthcare makes iCoreConnect an interesting player to watch, though it's clear that caution is needed with this kind of volatility. Please subscribe, give the video a like, and watch more from our playlist. Thanks.